Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? It's Tuesday morning. It is the first full day of fall. Yesterday was a day of fall, but today we're falling in, and the S&P is up 10, the Nasdaq's up 30, so we are having a little bit of a run this morning. Hey, everybody, hope you're having a great day. Welcome to the show. If you're new, do me a favor, click the subscribe button, hit the notification bell. A real quick announcement not everybody knows about. Started a brand new YouTube channel here in the last couple of weeks and thought it would be good to share. It's called Stocks on the Rocks. It's where we analyze a drink and we analyze a stock. So I'm going to put the link to it in the comment section below. It's very, very new, so I don't even have a customized YouTube channel page yet, so do me a favor, go there, check it out. I'd love it if you'd give it a subscribe, but this is really not as much for traders as it is for investors, a little bit longer term, so if you know anybody who might like it, please feel free to share the link. All right, let's go ahead and get rolling. So the S&P this morning, we're up 10. Now, we're up 10. I had two levels of supply yesterday as the market came close to those levels. We came really close to this one here towards the end of the day, and then we kind of based in front of it. So we went through it, but realistically, with the price action in front of it, it wasn't a great level, and it came to it at the end of the day. Now, our other level, we actually had a little bit of a potential entry in the evening hours, and price has moved away from there pretty nicely. So if you took that other level, which I know a couple of you did, I got a couple of texts last night from some people that were in this level. Why has this level been effective so far? Well, it's the retest of a speed candle area, right? So now that level, we've traded all the way to the top. If you're in it, take your stop, move it down to below here to lock in a little bit of profit. And now we're kind of bouncing off this area here of demand. So, my next thing to look at would be, where's my next area for a trade, whether it's a long or a short. And as I kind of peer into that, I don't see a lot of great levels at this moment. We're still, chopping along sideways. This 30.29 area is our all-time high, so we're coming close to that all-time high. Not quite in it yet. So for now, I would say that the better play is just to hold off, wait for a potential breakout setup. Looking at the NASDAQ, same thing happens here in the NASDAQ. We came close to this upper level. We're not able to get in. I'm still going to leave the level there, but I'm going to switch to a confirmation entry because we came close and we're unable to get filled on that level. So I'm going to put that one in because I think it's still a valid area. It's just price hasn't gotten to that area as of yet. Crude oil. So let's talk about crude. So yesterday in crude, we had two levels that both met entry and both moved away pretty nicely. So the first was our confirmation short. Now this confirmation short, price hit that level and then we moved away really quickly. We got a nice little, about a 2-to-1 reward to risk on it, but we put out in the update, and for those of you that check the trade feed updates at TradersArmy.com, we put out in the update at 9:07 that's moved 2-to-1 and is sitting in a possible demand zone. At this time, move stop to break even, take some off the table if you had multiple contracts. Reason is that we had come back down to this opposing fair price value area. So we got one with a nice little move away, worked out for a little bit of a run. So that level was okay. And then the second level, we got a little touch and go, a kiss off the level, and then another bite at the apple as it came back down from that zone. So if you're still in it from up here, now you should take your stop and move it down to 58.49. So 58.49 would be the area to move your stop to lock in a little bit of profit. Matter of fact, you should probably be taking some off the table at this point as it's moved about 40 ticks your direction, at least 50 ticks your direction, which is a pretty good little move for essentially what is a fairly sideways price market here. I still think there's a better chance that price is going to continue to fall from these levels. And so looking into what might be some decent opportunities for today, if we make it through these lower wicks that happened down here, I think there's room for price to continue to fall even further. And so keep an eye for a potential breakdown below this level sometime later today. In gold, we are still in between our major areas. in gold, I do see a decent little setup here for a potential breakdown below 1526. I think there's a chance that we get below there and get a little bit of a run. So keep that one in mind for today. And then in our bonds and currency markets, so we have a couple of things worth noting in both our bond and currency markets. In our ZN, our 10-year note, we had a breakdown. Price didn't quite get there yet, so I'm going to leave that one in play. Supply is still up above us, so once again, we're still in between our levels. It's just practicing the art of patience. In the Aussie, now the Aussie, unfortunately, we got a little bit of basing in front of the level on this one, and we came close to it through here, and it just wicked right through that area. Just popped right through it here in the last little bit. So with that basing in front of the level, it makes it lower probability. We all know that basing is the kiss of death before a level, and that's kind of exactly what we saw here. So to me, there's nothing else to add because my next supply level's up here, and my demand for a breakdown is still below me in that region. In the euro, we talked about the euro trade yesterday. If you took that euro trade, we said take your stop and move it to break even. So that euro trade, your stop is moved to break even. If you're still in it, great. You're not hurting yourself because it's more than the 6 candle rule and hasn't gone anywhere. But you probably have better opportunities elsewhere. Although we could see a breakout. Now, what I am going to do is just based on this sideways price action, I'm probably going to want to remove this lower level because if indeed we do break out, it'll probably break out to the original trend direction, which in this case would be down. So I'm going to remove that level down below us because that makes that demand level now much weaker. It's already been hit once. No sense in trying to go to the well too many times. Canadian dollar. The Canadian dollar, we had our setup off this little area here, gave us a little touch, moved away, and then stopped us right out. And even if you didn't have your stop too close, you got 1, 2, 3, 4, 5, 6 candles. It just did not level. The level just failed. There's no way to make that sound any better than it was just a failed level. And in the failed level, we had our next stage would be what's our next move. And so for now, all these upper wicks really kind of make these levels null and void. So I'm going to leave all these levels be to look for our next opportunity. Great British Pound, we see the same thing that happened in the Aussie as happened in the pound. We got that big wick up right through our potential supply, and even it went through where your pivot stop would be. So now the basing in front of it obviously makes it that much weaker. So knowing your own rules, if you took that or not, because you got to have at least a 2-to-1 reward to risk, right? So when I look at my 2-to-1 reward to risk, here's going to be my opposing demand. If I think of this as my risk, which is even a little bit bigger than this, duplicate that drawing. There's a 1-to-1 reward to risk essentially. And so here would be a 2-to-1 reward to risk. So it was right on the borderline. So depending on your risk tolerance, you may or may not have gotten a stop out on this one. But the idea is that these stop outs, are smaller than, say, the crude oil move, right? Or the euro move. And so you're going to get stop outs. But the key is, how do I trade the places in between them? So those are now our levels in the Japanese yen, still in between demand and supply. Nothing really to add here, although we might want to look at this area up here in the future for the yen. I think this area could be a decent level later today. So remember, like I said, click the subscribe button if you are looking for something interesting to watch. I'd love to get your comments on the Stocks on the Rock show. If you've got a stock you want me to analyze, it's a longer term or investment style. If you've got a spirit you want me to analyze, trust me, you don't have to twist my arm to drink a new spirit. I will gladly do so. Please leave it in the comment section down below. And thank you guys so much for jumping on today. And I will see you tomorrow morning.